2024 Bitcoin halving, brace for the price surge. In 2024, the main event in the Bitcoin calendar, halving, should take place. What is it? According to the white paper, halving is a built-in feature of the Bitcoin blockchain that is activated approximately every 4 years. This unique event halves the amount of BTC that miners receive for processing transactions. Why is it important? It's all about supply and control. When Satoshi Nakamoto created BTC, he limited its supply to 21 million coins to avoid inflation. A common problem with traditional currencies that are controlled by central banks. Halving plays a key role in fulfilling Bitcoin's strategic goal, increasing scarcity by gradually reducing the number of new BTC in circulation. This can increase the value of the coin as it approaches maximum supply. Briefly about the main thing in 2024, the halving will occur. Mining rewards will be halved, which will cause excitement and speculation in the cryptocurrency market. Supply and scarcity. This event will curb BTC inflation and increase its scarcity. Impact on prices. Past halvings have significantly affected the price of BTC and led to significant fluctuations in the market. Changes for miners. The halving will impact mining revenue and push the industry to move to more efficient methods and technologies. Future of Bitcoin. Upcoming halving raises questions about BTC value, adoption, and mining sustainability. What is Bitcoin halving? Bitcoin halving occurs every 210,000 blocks and cuts the mining reward in half. This feature was built into the Bitcoin code by its creator Satoshi Nakamoto to reduce mining revenue every 4 years. Initially, miners received 50% BTC per block, but the reward decreases after each halving. In 2024, it will reduce miners' income from 6.25 BTC to 3.125 BTC. Halving plays an important role in regulating inflation and preserving the value of Bitcoin. By reducing the rate at which new BTC is mined, the market mimics the limited availability of precious metals such as gold. This scarcity is believed to contribute to the price of Bitcoin rising over time. Halving is an important event because its deflationary mechanism helps preserve capital in an environment where traditional currencies may become worthless due to inflation. The predictability and transparency of the halving stands in stark contrast to the discretionary monetary policies of central banks. The upcoming Bitcoin halving in 2024 has caused a stir in the crypto community. The fact is that past halvings led to a significant increase in the value of BTC. For example, after the 2016 halving, the price of Bitcoin skyrocketed to almost $20,000 by the end of 2017. Because of this, crypto enthusiasts are speculating that the 2024 halving could trigger another price surge, with some even predicting new highs. Growth prospects are encouraging against the backdrop of other economic factors, such as the 2022 crypto winter and the 2023 recession. However, it is important to remember that trends may not repeat themselves. Positive results in the past do not guarantee future success. Cryptocurrencies are extremely volatile, so it is important to do your own research. Still, halving has the potential to significantly impact the BTC economy and market behavior. Therefore, many are asking the question, what awaits Bitcoin after the halving? Past influences and trends review and analysis of history. Let's look at a brief history of the Bitcoin halving. Bitcoin creation in 2009. The initial mining reward was 50% BTC per block. Halving in 2012, a drop to 25 BTC caused the price to jump from $12 to over $200 within a year. Halving in 2016, the mining reward dropped to 12.5 BTC, after which the price resumed rising, and by December 2017, BTC reached around $19.700. Halving in 2020, the reward dropped to 6.25 BTC, after which the price jumped from $8,787 to almost $69,000 by November 2021. Impact on the dynamics of supply and demand. After the halving, the Bitcoin mining rate decreases, which reduces the total number of BTC available. This limited supply, coupled with increasing demand, usually results in an increase in the value of Bitcoin. The intentional limit of 21 million coins determines the value of BTC, and the halving plays an important role in shaping the economic structure of Bitcoin and its market perception. Market sentiment and long-term trends. Bitcoin halving often causes intense anticipation. Reduced supply and potential price increases are making traders optimistic. However, these events can also create anxiety, indecision, and skepticism, causing temporary changes and instability in the market. Despite the short-term consequences, halvings are necessary for the long-term security and stability of the network, as they incentivize miners to accommodate lower rewards and maintain the integrity of the network. Impact on miners. The BTC halving affects the mining community in many ways. It forces them to immediately make adjustments and change their long-term strategy. Each halving reduces the block reward by half, which directly affects miners' earnings. For example, in 2020, their income decreased from 12.5 BTC to 6.25 BTC per block. All of this will become critical for less effective participants, miners with high operating costs and outdated equipment risk incurring losses or going out of business. Miners with modern equipment and cheap electricity will be in an advantageous position. The short-term consequences of the halving will create a competitive environment in which only miners with favorable conditions will remain. Long-term changes in mining. Let's look at the long-term changes in mining due to the BTC halving. Technological innovation. The halving stimulates innovation as miners adapt to changes and look for new ways to operate efficiently. Efficiency. To maintain income, miners are switching to energy-efficient equipment with high performance. Optimizing efficiency. The industry has moved from increasing hash rate to operational efficiency. Infrastructure upgrades. Infrastructure upgrades are required to adapt to changes after the halving. Advanced mining equipment. In order to maintain performance, miners are switching to modern installations. Change of location. To save money, miners move to regions with cheap electricity and a cool climate. Popular mining locations. Cities such as Ulaanbaatar, Mongolia, and Bratsk, Russia, are often used for Bitcoin mining. The future of Bitcoin mining. The future of Bitcoin mining depends on its efficiency and strategic adaptation. Among other things, halving significantly affects the network hash rate, that is, an indicator of mining power. After halving, the hash rate will decrease, but only for a while. In the long term, the network is expected to regain stability and continue to grow as rising prices due to reduced supply may offset lower rewards. For miners to remain profitable, they need to switch to efficient equipment and cheap electricity. At the same time, the BTC halving creates both difficulties and advantages for miners. It changes mining processes and contributes to the development of new methods and technologies, which ultimately develops Bitcoin mining. The future of Bitcoin halving and mining. Bitcoin has an interesting future, especially in the context of halving. End of Bitcoin halving. Maximum supply. BTC supply is limited to 21 million. Once this limit is reached, no more Bitcoins will be created. Impact on miners. The last coins will be mined by 2140. As they approach the limit, miners will increasingly rely on transaction fees. Changes to mining rewards. Shift to transaction fees. As block rewards decrease, the main incentive for miners will be transaction fees. Many expect this to increase the prospects and profitability of mining. Environmentally friendly mining. Energy consumption. BTC mining requires a lot of electricity, but projects are gradually reducing consumption. Eco-friendly solutions. Flare gas, nuclear energy, and other innovations are starting to be used in mining. Flare gas is a byproduct of oil production, and nuclear energy is a carbon-free resource. Renewable energy. Developers are improving equipment efficiency and using renewable energy sources such as solar, wind, and water. Forecasts. Energy-efficient and environmentally friendly mining solutions are expected to evolve in line with global sustainability goals. What do industry experts say? Paul West, CEO of FUM Games, is interested in the post-halving price movements, but is more interested in Bitcoin's future role in society. He proudly noted that his company's mobile game introduced more than 1 million new users to BTC and contributed to the development of this asset. Mithil Thakore, co-founder and CEO of Velar BTC, believes that the approval of spot Bitcoin ETFs in the US and the 2024 halving could bring billions in new institutional liquidity to Bitcoin. Thackeray also expects ordinals, BRC20 and second-layer innovations to lead to big changes in the crypto market in 2024 and 2025. Nazareth Q, a crypto enthusiast and podcast host, expects the network to remain active after the halving. In his opinion, Bitcoin will strengthen the status of a scarce optimistic asset that protects against inflation. Nazareth Q is also counting on increased value and confidence in BTC, as well as increased attention from institutional investors. Phil Champagne, author of the book of Satoshi and Bitcoin versus Altcoin, has extensively studied Bitcoin price prediction, especially in relation to central bank policies. He believes that the halving will increase the price of BTC, but it will also be affected by the broader economic context and stock market dynamics. Champagne also notes blockchain backer and other technical analysts who focus on XRP, but acknowledge Bitcoin's impact on the cryptocurrency market. Conclusion: in 2024, the Bitcoin community is waiting for the halving and the changes it will bring. Past halvings have resulted in significant increases in the price of BTC, fueling speculation and excitement about the upcoming event. However, it is important to remember that past trends do not guarantee future results, and cryptocurrencies are volatile and require careful research. As enthusiasts count down